You don't make money in any market until you sell. It is so easy to buy crypto and see profits in a bull market on paper, but most will still lose money. So let's dig in to how I'm locking in gains and my exit strategy. Hi everyone, welcome back to my channel. On this channel, I like to talk about different ways to make money on your phone, creating passive income sources, making good sound investments, and some helpful tips here and there. If you like this type of content, then hit that like button, subscribe, and click the bell notification so you get notified when I make videos in the future. And added timestamps in the description below so you can skip to whatever part of the video you're looking for if you don't have time to watch the whole thing. And very important, I am not a professional on this topic. This is just what I am doing in this market to lock in my gains. So make sure you do your own research and make your own exit strategy. First, let's briefly go over getting into the market. We are all in different places. Some have been in this market for years. Some are pretty new, just getting in the past few months. And some have not bought their first digital currency yet. So here are some things to think about. First, what is your plan? Are you trying to make big gains right off the bat because everybody's talking about all the money they're making in crypto? Well, if you are buying anything other than Bitcoin, is that asset that you're looking to buy likely to outperform Bitcoin? Because if it's not, there's no point of buying something else, as Bitcoin is a lot safer bet. When you buy any asset, whether this is cryptocurrency or anything, have a plan to sell in place before even making that purchase, whether that is selling at a certain percentage gain or selling part of your investment at certain price targets, or a time like, I'm going to hold this till September and just see where it's at. All of these things will help take the emotion out of investing. Emotions are an investor's worst enemy. Next, think about tax implications. If you hold anything for less than a year, that is short-term capital gains. You will be taxed at a higher rate than if you held an asset longer than a year, long-term capital gains. Now, anybody getting into cryptocurrency right now, especially in speculative altcoins, you're likely not holding these for over a year. Now, another thing to think about, if you bought Ethereum at say $400 and sold that Ethereum at $2,000, that's a $1,600 gain. You are taxed on that $1,600. Now next, you put that $2,000 that you just made into this next speculative hot altcoin and it goes to zero. Well, guess what? You're still paying capital gains tax on that $1,600. So just think about that. Next, fees. Especially on these decentralized exchanges like Uniswap, the gas fees are pretty high. So this will play a factor in making your plan. Maybe instead of dollar cost averaging out 20% at a time, you may sell all of it or half of it to avoid these large fees. All part of your plan when buying. Liquidity. This is something you have to think about when buying lower market cap altcoins or trading on smaller exchanges. Is there a buyer for what you're selling? You might be able to get into this position and see a certain cryptocurrency go from $1 to $8 and try to sell it thinking that you're going to get that $8 price tag, go to sell it on one of these decentralized exchanges like Uniswap, and not get that $8 for it because there may not be somebody there to buy it for that price. So keep that in mind. Now, when you're in these larger altcoins or Bitcoin, liquidity really isn't as much of a problem. Simply, someone has to be there to buy what you're trying to sell. So you're probably thinking, where can I figure out the liquidity or volume on any given asset? Well, if you're looking in the crypto space, go ahead and check out CoinGecko. So now that we briefly went over buying and we realize everyone is at a different place in the market, let's go over how I'm locking in profits. And one more time before getting into this, remember, I am not a professional. I am just some guy on YouTube talking to a camera, hoping someone is listening on the other side.
No, I'm listening.
Are you listening?
Oh, I don't know. I'm just listening.
Okay, good. Now that I know you're listening, I'll continue. So make your strategy that works for you. I am done dollar cost averaging into the market. I will buy some dips in certain assets and maybe start a new position in a crypto I don't currently have, but it is few and far between. I am more in consolidation mode. I nearly have all of my initial investment that I put into cryptocurrency out at this point. I did put a little back in which puts some of my starting funds back in the market. But for the most part, playing with house money now. So I may do a few things that I wouldn't have done if I did not have the profits to back it up. As I've dollar cost averaged into the market for years, I am also dollar cost averaging out of the market. And some of my sell points have already hit. Whether I think it's going higher, I am selling what I set to sell when entering this position. For example, Bitcoin, and I know I'm going to get heat for this. I did sell 20% of my Bitcoin at $19,900. When it dipped back down, I did get some of that back in, nearly all of it. My next sell point was $39,900 with the same plan. Most of that money got in, but some of my limit orders did not fill. So I did have a little bit of money still left on the table that didn't quite get back into the market. So why these odd numbers?
Well, a good question.
Most people sell on round numbers. So by selling a little bit before that round number, it just helps you front run just in case the price doesn't quite get to that round number before a pullback, or it might get to that round number, but your limit order does not fill. Now, my next sell points for Bitcoin are $74,900, which I will not put any of that back in the market when I sell it, and $119,000. Now that does leave me with the rest for my moon bag. If I completely misjudge this bull market, which I believe it will probably go over $119,000. But again, selling on the way up is a lot easier than selling on the way down. There are more people buying on the way up, so more people to fill those orders. On the way down, it's a lot harder to get your price. So what are some of my main points when I look at to make a plan to dollar cost average out of the market, whether that be dollar cost averaging a position or selling it all at a certain point? Well, volatility and sustainability. Is this asset likely to make it through a bear market? And in just about every altcoin I own, the answer is no. It might make it through, but it's going to take a 90+% hit, more than likely. I've already seen it happen and got trapped on the wrong side of it. Not making that mistake again. Fees. When I buy something, especially on Uniswap or other decentralized exchanges, that you are paying an Ethereum gas fee, the fees are extremely high. So likely I will sell my whole position at a certain point or half the position, depending on how much I bought when I entered. One last thing. Institutions being here does not mean the market is going to be more stable. It's not different this time. Institutions will sell. These guys in the picture, they're selling. Maybe not all of it. Some of them might hold more than others, but the balance sheets are still denominated in dollars. So Bitcoin dropping 80% does not look good for them. Michael Saylor and MicroStrategies might be a different story. I mean, he does own majority of the shares in the company, which does help with his decisions. But for the average company investing in Bitcoin, this is a different story. So just keep that in mind. Now, there are only 4 positions I plan to hold through this bear market in some percentage. And most of these are only about 20%. I will hold Bitcoin. And if it absolutely moons past like $400,000, I will likely sell my last 20% of Bitcoin as well. I will hold 20% of my Ethereum, which my first target didn't hit, which is $2,400. I will sell a few Ethereum at $2,400. My next one is Chainlink. I will hold 20% of my Chainlink through the bear market. And this one is controversial, but it is VGX, the Voyager utility token. And the reason I will hold VGX through the bear market is because I use Voyager brokerage as my main source for buying, selling, and transferring cryptocurrency. Now, I will just hold enough to stay in the low tier of the Voyager loyalty program, which is 500 VGX. Next, what am I doing with the money I take out? As I don't want it just sitting in some lousy fiat currency that's losing its value day after day, especially with this money printer going. I am actually putting all the money I pull out into stablecoins, earning myself 6 to 10.51% interest on platforms like Celsius, Voyager Brokerage, Outlet, BlockFi, and Crypto.com. I do have some in all of those platforms earning yield. Also, if you've followed my channel for any length of time, you probably know I invest in rental real estate. So now I have money on the sidelines to buy a rental property when I see a deal come across my desk. Also having the rest of that money sitting in stablecoins, USDC to be exact, for the bear market. When that bear market comes, I do want to put money back in crypto. This isn't a one cycle thing. I've been through 2 cycles already, and next time I'm going to set myself up to catch it early as well. Now, another cycle is not guaranteed, but I'm pretty sure Most people see where this space is going, and blockchain itself isn't going away. So when everybody else is seeing red, I see green. I must be colorblind. I don't know.
White collar, blue collar. But I don't see it that way. And you know why not? Because I am colorblind.
Now, with all those gains from cryptocurrency, buying rental real estate is a pretty good move. With all those capital gains, it could help you lower your taxable income. By buying a rental property, especially if it needs repairs, those repairs can be written off, as well as depreciating the asset itself, among many other things. Oh, and on top of it, if you buy a good deal, you're cash flowing as well, so you have money coming in every month. Just a couple things to think about and diversify outside of cryptocurrency. So what leads me to all of this decision to start cashing out already and moving some of my money out of the market? I don't believe this bull market is going to last as long as some think. It has heated up way faster than expected, which means it will probably cool down sooner than expected as well. Now, history doesn't usually repeat, but it sure does rhyme. So we're going to see something similar, hopefully. I'm thinking probably around the time of August to end of September, maybe October if we're lucky. I could be completely wrong, and that's why I have my moon bags to catch the end if it does pump way higher than I expect. So probably not going to catch that Christmas rally like in 2017. This year, around Christmas, we're probably getting coal in our stocking. So I'm cashing out before that happens. Of course, stimulus will play a role in this. I think this next $1,400 stimulus that's just getting passed today will likely bump up the price of Bitcoin past 70 grand in this next leg up. Depending on what happens after that, if more stimulus comes later, maybe it will keep the markets pumped up. But right now, most of what is going on in the stock market is due to the overabundance of stimulus. And as much as people want to say crypto is a hedge against the traditional markets, it's not. We are still tied to the stock markets. We have not detached. When the stock markets go down, crypto goes down harder. When the stock markets go up, crypto usually goes up higher. So until I see that correlation separate, I'm going to be looking at what's going on in the stock market. If you are new to the market, contrary to what you might have heard, crypto does not just always go up. When it goes down, it's going to go down hard. So at this point, if you're new and you just got in, don't be too greedy. If you see 1, 2, or 3x gains, think about at least taking your initial investment out. So in closing, yes, with my strategy of dollar cost averaging out of the market as I dollar cost averaged in, I will leave a lot of gains on the table. And I am completely okay with that because I locked in profits. I didn't wait till the end and hopefully try to catch the top. Professionals don't even do that well. So what makes me think that I can outsmart them? So I locked in some gains already and I will continue to, but I just don't know the top.
And better because maybe I'm not good enough.
Also why, again, I have my 20% moon bag in those 4 positions, just in case I missed it by a whole lot. I can still sell, or if I'm wrong, just hold on. And I'm completely good with that as well. So just remember 2 things. Volume and liquidity. It is a lot easier to sell on the way up than the way down. And you don't make anything until you sell. Those gains on paper mean nothing. So if you are in cryptocurrency or ready to get in cryptocurrency, just think about a strategy when you're entering. And don't forget to give yourself a raise. I'll see you next time. A few videos popped up to your left and right. If one of those perk your interest, give it a click.